Gujarat Gas has lagged behind its peers in the last quarter as far as volume growth is concerned. But the state-run city gas distribution company is expected to outpace some of the other distributors, at least in this financial year and the next, partly due to the National Green Tribunal order. Amit Sarkar is here to tell us why. What is so special about that order that will lead this company to do better than the peers? Amit.
Firstly, I'll start off with how the fourth quarter performance was for all the three city gas distribution, and then I'll go into what is expected to happen over the next 2 years.
Sure.
Now, if you see in the fourth quarter of financial year 2019, Indraprastha Gas outperformed its peers. Now, the numbers of the company were ahead of the analyst estimates, and that was because of a strong volume growth that the company reported in the fourth quarter of financial year 2019. But its unit margins, that is EBITDA per standard cubic meter, now that declined due to a greater share of industrial volumes and higher cost. Now, the volume growth for IGL was nearly 17%. That was at a multi-quarter high, but it was the only city gas distribution company to report a decline in its margins. But however, this won't matter much for the company, because if the volume growths are expected to remain so high, then a marginal decline in its unit margins won't impact its EPS much. For MGL, if you see, the volume growth was nearly 7%, but it was at a slower rate compared to the earlier rates that we have seen, and that was because of lower CNG consumption, which was impacted due to strike by Best Buses. But its unit margins continued to grow even in this quarter on the back of pricing power that MGL has in Mumbai area. For Gujarat Gas, volumes declined by nearly 4%, and that was because of a tepid volume of offtake by industrials, but its unit margins expanded the most, nearly 19%, due to the price hikes and lower raw material prices that we had seen in the fourth quarter of financial year 2019. But it's now, however, going forward, if you see, Gujarat Gas is the only player which is expected to outperform its peers by a very large margin. Now, if you see over FY19 to FY21, Gujarat Gas is not only expected to report its highest volume growth, but its earnings are also expected to grow at a higher rate when compared to IGL and MGL. But despite this outperformance, the stock continues to trade at a discount to its nearest peer, that is Indraprastha Gas. Now, for compared to MGL, if you see, Gujarat Gas is trading at a premium, but that is because MGL is a very small player compared to Gujarat Gas. So its nearest peer is IGL, and compared to IGL, if you see, the company is still trading at a discount. Now, the reason behind this is the volatility in the margins that we have seen for Gujarat Gas, and because of the inconsistent volume trajectory that Gujarat Gas has reported. Now, if you see in the last 4 quarters, Gujarat Gas volumes have declined as much as 4%, but it has also given as much as 18%, and that's the kind of volatility that you can see in Gujarat Gas volume. And if you see unit margins, that is EBITDA per SCM, it has increased as much as 54% in the third quarter of financial year 2019, but in the previous quarter, that is the second quarter, that declined as much as 32% for Gujarat Gas, and because of this inconsistency, there's this discount. But going forward, if you see, this is expected to remain stable because of the recent court order which has banned the use of polluting fuels in the Morbi region. Now, because of this move, so far in FY20, the volumes of the company have already moved up to 8.5 million metric standard cubic meter per day. That is the daily volume consumption that Gujarat Gas is seeing, and this is nearly 31% higher compared to the average volumes done by the company in financial year 2019. So this higher volumes is expected to result into a strong cash flow for the company, and obviously which will lead to a debt reduction and interest cost reduction for Gujarat Gas in the coming years, which will in turn boost its earnings per share going forward over FY19 to FY21. And that's the reason we are seeing this kind of higher growth for Gujarat Gas when it comes to volumes and its earnings per share.
Yeah, and I'm presuming because the earnings per share are also growing at a good pace, operationally they won't have to do any compromises in order to grow the top line growth at a faster pace.
That is still one concern, and if the company performs on that side, if the prices do remain stable for Gujarat Gas in the first half of financial year 2019, we can likely see a re-rating. That is what the brokerages are saying, and the analysts whom I spoke to were mentioning that if the volume growth and the pricing power remains for Gujarat Gas, at least in the first half of FY20, we could see a re-rating in the stock going forward.
So the first couple of quarters would be very keenly watched out for.
Yes, very
Gujarat
important,
Gas,
because it was the recent order that has come in. So we'll have to see, because largely if you see in Morbi region, the players are very much unorganized, and if there's a hike in prices, and if they're not, and if their business is not viable, they might as well shut down their business. So volume growth will be the key important factor to watch out for, at least for the first half of financial year 2020.
Okay, let's wait and watch. Very interesting that the street already knows that here is a company that potentially will outpace its peers, but still have to wait for the first couple of quarters in order to see what's the quality and the granularity of the growth. So, thanks so much for putting that into perspective.